what kind of advice do you have to homeowners?
Practicing that preparedness, starting the conversation now is always going to be a benefit to any association out there.
And welcome to Recovery Report Live. I'm Dan Odess, president of GlobalPro, where we manage your risk to recovery. We have managed more than $1 billion in that recovery, but we don't just manage claims and recoveries. We help you from whether it's placing insurance to recover from a loss and rebuilding. It is a cycle. It is our signature process. To learn more about it, check us out on GetGlobalPro.com. Hit the subscribe button because you're not going to want to miss these upcoming episodes. Today's an awesome episode with a great guest that is going to provide us a lot of information that I know all of you in community associations can use. It's really important information, especially in the wake of the Surfside collapse. And again, our hearts and prayers are with those. I know efforts have transitioned from the rescue to recovery. Definitely, I tuned in for the moment of silence. All of those incredibly brave, whether they're from the EMT to the police officer to everyone involved, the local authorities in helping that community through this tragedy. We continue to do our part. We hope all of you have done through whether it's donations of money, through charitable giving, clothing, furniture, food, whatever, housing. You've seen really a community just get involved here and do what they can for it. Just proving our resiliency and proving that there is a lot of people out there that do care and want to do their part. So again, our hearts and prayers are there. We'll continue to watch those things as they evolve, continue monitoring the situation. Unfortunately though, what comes of that is, a lot of change and staying kept up to date with that change, making sure that your community association is doing what it's supposed to be doing, can be a very, very daunting task. I'm sure a lot of you as board members or even as attorneys or advisors like ourselves are feeling the pressure, feeling the heat. A lot of people looking at you. A lot of people are going to be critical of decisions that you're making and advice that you may be giving. A lot of, I think, professionals are going to think twice before they send that email, press send, and have someone review it and look at it once more and really, really, really get into it. And that may at times slow down the process, but sometimes changes in law don't allow you to really slow down and look at it just one more time. They're requiring you to take action, and that's what it's really all about is taking that action that's in the best interest of a community, taking the best interest that's in the best interest of you as a board member or as an advisor that's giving advice. Taking action is so important. We talk a lot about planning for the what if. A lot of our planning is just assuming it's going to happen and simulating that and walking through, okay, what am I going to do? But nothing can simulate the pressure that you feel, the anxiety, that tough situation you are at that moment when it happens. It's just something you can't do. Look at our military when they're training. They try to use live rounds of ammo and put you in that situation. And if you talk or listen to some of the soldiers when they're out in the field and you're hearing about it, like they say that nothing is like that experience when you're there on the front lines dealing with it. And it's not to say that you're at war, and it's not to bring it in the direction of something very negative and bad. I think there's going to be a lot of good changes that come out of this that are going to help community associations to make sure that they are doing what they're required to do, making sure that they're responding to the needs of the community, making decisions that are informed decisions about the importance of making sure that they're taking care of the infrastructure, taking care of the community, making sure that the building in itself is being properly maintained, and that you're addressing those concerns before you get the shiny new furniture at the pool or the movie theater gets new carpeting or stuff like that. Those are all really, really important. One of the things that I was tracking and analyzing was the opinions coming out through a lot of the insurance industry periodicals, whether they're newspapers or magazines or blogs. And you're starting to see a little bit of the dark side of the insurance. There's a lot of overwhelming feeling like, they're just going to tender the policies. They're going to give these people money, do all these things. And then you're starting to see these articles talk about that this may not be covered or it may not be this. But the important word is may. The reality is that there is a chance, and there's no need to talk about the may, certainly in this situation when we're trying to deal with these things. And unfortunately, though, when associations do suffer tremendous loss, whether it be from a hurricane or a tornado or in a situation like this, you do have some pundits and people that are some special interest groups that come out and start talking about why things may not be covered or certain limitations of those things. And while they there may be an argument for or against it. Why aren't we focusing on why we're not for it? And why are we muddying the waters with the idea that there may not be coverage for this? Now, it's important to talk about the issues of collapse and educating people about it, because it's certainly a very complex coverage issue. We've talked about it here even before Surfside, right here on the Recovery Report. It is a very complex coverage issue, but there's not only collapse coverage here, there's many other types of coverages that we're talking about, whether it's the D&O insurance, whether it's the general liability, the professional insurance for others that were involved in this process. There's certainly a lot of analysis going into that. There's some discussion about HO6 policies for unit owners. Those things need to be broken down and understood, but the idea that this loss would not be covered by property insurance and the insinuation that is, I just don't see there's really a place for it. And I think we need to all just look at the fact is that through long litigation, there is a strong possibility that the association would have prevailed or would prevail on coverage for it. And the fact is that we need to kind of move on from that and look at other issues down the road that are more important. And to address those other important issues, and certainly in the wake of Surfside collapse, there's been a lot of discussion about the legislation changes that are going to be proposed and changes to local and federal laws where it relates to community associations and the maintenance of that infrastructure. And there's been a person here in Florida on the front lines working with the Community Association Institute. And I want to bring on our next guest. Thank you for joining us, Travis. I wasn't sure if the click of the button there actually worked. It took a little bit of delay. Travis Moore with Moore Relations. I'm so happy to have you on today. We brought Travis on to talk about important issues, but the reality of it is that there's been a lot of talk about changes that are going to come, but there were already a lot of changes that were made this year, and we want to make sure that you're aware of those changes as well as talk about what may happen or what's to come. But before we get there, I want to give Travis the opportunity to introduce himself, his company, and talk about those things. So Travis, tell us a little about your organization and your involved in community association industry. I mean, GlobalPro has been involved for more than a decade now, very much involved in CAI. Great organization run by an awesome group of people, very, very, very helpful individuals that are doing it. And I know they've relied a lot on you for some guidance. So tell us about your organization and your involvement in the industry.
Thank you, Daniel. And thanks to you and what GlobalPro does, before, after, and during these situations like we're seeing, unfortunately, in Surfside. And thank you for making those comments at the outset regarding the community there and the support that's coming. Thanks for having me this morning. I appreciate it. CAI, I represent CAI. They're one of my clients. Moore Relations is a governmental affairs, public affairs firm, primarily deal with state legislative lobbying issues before the state legislature and also before various state agencies like DBPR, the Department of Business Professional Regulation in this case, and others. So CAI is one of my clients that I've represented for almost 20 years now. I was involved with the legislature, worked for the legislature as staff, both in the Florida House and in the Senate for many years, then left, went to work for a law firm, and then as part of that, transition out of that, took on CAI. Community Association Institute, headquartered out of the Washington, D.C. area, Falls Church, Virginia. Been around over 40 years, very active in states across the country, 37 states and in some countries. Each state has a legislative action committee. Florida here, it's called FLA, the Florida Legislative Alliance. And we have 8 chapters in Florida that cover everything from Destin to Key West. And those 8 chapters select 2 delegates each, and then the remainder are made up of at-large delegates. So there's 24 delegates. I think the most important thing isn't the geographical pull that they have from coming from around the state, but from the fact that they have every sector of the common interest ownership industry kind of represented. So when we look at legislation, whether it's to propose a change or somebody else has proposed it and we're opposing it or want to modify it in some way, we're looking at it from insurance agents, managers, attorneys, CPAs, bankers, board members, association members. So we're able to look at it from that whole cross section. So when we tell policymakers, yeah, we vetted this, we think these changes need to be done, it's not something that's maybe just for the developers, let's say, or attorneys or an insurance. They have their own associations that represent those particular interests. So we're able to really work on behalf of the community association. And then to your point, there were a number of changes that were made this past legislative session, which ended the very last day of April 30th. A number of bills passed that will impact associations that went into effect on July 1, so just a couple of weeks ago or less. So in July 1, there's a number of changes, everything from COVID liability to insurance to things relating to emergency powers for associations that we were kind of all operating under since COVID. But now we kind of codified some of the emergency declarations by the governor and DBPR secretary to kind of say, okay, you're allowed to hold these meetings electronically, kind of codify the business practices that everybody's been doing. So it was a very active session. Like I said, we can talk about a lot of those things, or certainly I'm available as a resource going forward. But then certainly, the conversation in the world changed here, certainly not only in Florida, but I think around the country, a couple of weeks ago today, very unfortunately. And I think what we're going to see are, as you mentioned, a lot of changes. I think we're going to see them more from initially from the private sector kind of driving this, whether it's insurance companies, real estate agents in the real estate market, lenders, bankers, and lending institutions wanting more information. I think we're going to see it from that side of things, just consumers forcing some good changes. And then I think the public sector will catch up with that. Some of that just has to do with the fact of just the legislative calendar. They'll be holding committee meetings again, but not until September. And then, so bills could get filed, but they're not going to start really getting heard until September. Then session doesn't start again until January. So you're really looking at, even if they passed a bill immediately, a change to state law not really going into effect until, early part of 2022. So I do think we'll see some private sector. And then finally, I'll just say in opening that the apathy that I would call apathy that we often see, and I don't even call it complacency. It's just the involvement that we see from even the community association side, where, as it's hard to get people even to go to meetings, to analyze and look at their documents closely, to serve on the board. We often have more vacancies than we do folks wanting to serve as board members. All evaporated and changed immediately a couple weeks ago. And so also the apathy that we see oftentimes on the public sector side, legislators are dealing with a whole host of things, from COVID to, gun issues, transportation, a whole bunch of things. And a lot of times the association stuff, not top of focus, and they tend to be reactive. Rather than companies like yourself that are kind of proactive to say these are the things we need to be doing now for the future episode. And so I think now we're getting a lot of attention. Again, tragically, I think but at least it is happening. So when we do come out of this, I think we will have stronger community associations here in Florida.
I couldn't agree with you more. I mean, you definitely are there on the front lines dealing with these issues, and I applaud your efforts. I've spent some time both here in Tallahassee on the state level, as well as I took a trip with the chamber to Washington, D.C. on a federal level with one of the local chambers here. So I really got to see government and how it works, and the bartering that goes on, and the negotiating, and how complex it is. So I know your task is daunting. And we talked earlier prior to coming on the broadcast about how many different laws apply to the operations of a community association, from being a corporation, multi-million-dollar corporation in a lot of regards, because some of these associations have literally millions, if not tens of millions of dollars on hand at any moment, And each of their unit owners is basically a shareholder, right? They get a vote, they get to be a part of the process, meetings and structure to these things. So there's so much that goes on. Then you have a whole bunch of other laws, right? You have 718, 719, 711. Then you have all the insurance legislation, which talks about associations and liability and things like that. So, for anyone as a board member who is a volunteer board member, right? Who has a fiduciary obligation to unit owners, right, to its fellow neighbors. And these are your neighbors. These aren't just shareholders, right? These are your neighbors. This is the family next door, the door down the hallway.
You're living at corporate. You're living at corporate headquarters.
Right. You can't just pack up your bag at the end of the day. It's 9 to 5 and go home. No, you are literally at home, right, doing these things. And it's 7 days a week. The stress, the anxiety of dealing with those situations, particularly in the wake of something so tragic as you mentioned. I just, I applaud all of their efforts and hope as a community they can, really come together. I'm sure you've heard or seen the board meetings, in the past, where there's just all this tremendous infighting and special interest. These little groups form and they do almost like a coup. They're attacking these board members and they forget it's volunteer. And these people get voted by popularity, but then the popularity doesn't even show up for the vote. So it's a very complex situation. But let's get a little weeds on some of this stuff real quickly. There's short-term and long-term, right? You mentioned the long-term a little bit. There's a lot of changes regarding codifying some of the things that we're already kind of in practice and doing because of the pandemic. Is there anything that really sticks out in those long-term changes that you see that went into effect on July 1st?
Yes. Let's just start with some insurance changes. There's a concept in insurance called subrogation. A lot of times we hear about that in the auto side of insurance, where if you're involved in an accident, your insurance company may take care of the initial repairs, but if you were not at fault, then maybe my company goes and gets the money from your company. And in subrogation, it is a lawsuit in a way. It's an action where we are then going after, let's say it's State Farm, my insurance company says, well, Dana, your driver was at fault, so we repaired it, but we're going to go after Geico or whoever you have to get our money back. Well, in a association setting, what we saw happening was carriers on the HO1 in particular, just happened to be the largest HO6 carrier in the state. They would buy just every claim. They would take and fix the unit owners, Mrs. Smith's damage to her unit. And as you know, you're very familiar with this, your unit owner policies covering from the paint, and then the master policy, the association that you also pay as part of your dues, that covers everything else. But if, they take care of Mrs. Smith's flooring and things that happened from a water leak in the wall that was of no fault of anybody, just, these things happen, they would pay the claim. But then a couple weeks later, the insurance company that represents the association would get a letter demanding a subrogation demand saying, we paid for it, but we want you to pay us now, the $5,000. And then if you didn't pay, if the association didn't pay, and oftentimes that's below the deductible anyway that the association's policy would have, it would then immediately go in 30 days to $30,000, $45,000. So associations were just paying it, or all kinds of confused about do we owe it? The association policy was saying we're not paying it. It's not us.
Right. I know exactly what you're talking about. We saw so much of this. It was crazy.
Yeah. As of July 1, we passed a big association package, and as part of that, which was Senate Bill 630, it said if the master policy does not allow for subrogation against a unit owner policy, and like 99.9% of them do not, because the lenders in these buildings don't allow it. So if your master policy can't subrogate against a unit owner, your insurance company can't subrogate against the association. Now, if there's negligence, those kinds of things,
different.
fine.
Yeah.
But and the unit owner can still do whatever, but their company, their insurance company can't bring the suit. So that will have an effect on helping to lower, hopefully, and stabilize these increases that we're seeing on the liability side of the master policy.
Yep.
And as you also know, insurance is the number one budget item for a condo, and anything we can do to try to stop, help bring that down. There were changes made in another bill that dealt just with insurance. Senate Bill 76 also went into effect on July 1. That goes right to what you assist associations with, and that they did things there like change the statute of limitations from three years to 2 years. They kind of picked a number that they thought, you've got Louisiana sitting out there at 6 months, North Carolina is at like 5 years. So they said, well, let's do like 2, because they were looking at all those IRMA claims that were coming in that third year, saying a lot of those, may have been fraudulent. Let's you should be able to get those claims in. If you have a supplemental claim, you still have another year to do that. But those are the kinds of tweaks. They made a bunch of tweaks that I'm not sure you're not going to see insurance rates drop like a stone or anything, but at least it'll, because it takes a long time. But I think you'll start to see, like I said, stabilization. And then they, because of the rate increases that we've been seeing have been just, straight up.
True.
And we're losing companies, as well, that are not writing, either they're going out of business or just not renewing here in the state of Florida on those master policies. And that then becomes a problem, because then the rates go up if there's a smaller pool to choose from. So we had, those kinds of things. We dealt with things like home-based businesses. There was a bill that passed, 403, House Bill 403. We were very concerned that, there's a balance. You should be able to, do work out of your home, those kinds of things. But then there's a difference when you're running a business, you're running a CrossFit gym out of your garage. And so we wanted to make sure that we created a balance there that allow associations through their documents to kind of control that environment. Dealt with things like electric vehicle charging stations to allow them to be put in common areas without it being a material alteration. Those in the association world know what a hassle that becomes. Now we can say, look, you can put it here. The board can decide how they want it to be billed to different individuals, but at least now we have a community. You can put in a community charger, because we see more and more of those of electric vehicle charging stations being put in. So there was like I said, we could spend a long time dealing with everything from, you only have to keep bids that you get now for the bids that are not part of a contract for a year, instead of having to keep them for 7 years or something. Yeah. Things that are along those lines.
No, it seems like a lot of good changes there. I think Senate Bill 630, the whole liability thing. You definitely saw almost like a weird cottage industry of insurance companies going after insurance companies, and it started always with the association, obviously, and everything was suddenly a liability claim. We definitely saw some struggles there, because we were at community associations calling us left and right, going like, "What do we do with this?" And I'm looking at it going, "Look, man, I got a stack of those things on my desk. I honestly don't even understand it, because you would never be liable for this anyways. I feel like it's just to get money to offset whatever it is." And unfortunately, some of those bad actors that we've seen do those things are also the ones that they find with all kinds of other anti-consumer stuff. So, I'm not surprised by it. We saw a dramatic increase in liability there. Are you expecting any of these long-term changes to get impacted by some of the short-term, focus and energy because of the Surfside collapse?
Yes, I think we'll start things around the reserves, inspections, things along those lines. From the inspection side, we only have 2 counties that we're, that now, the world knows. Before this, it was one of these arcane facts that I don't think many people knew, but there's only the 2 counties, Miami-Dade and Broward, that have the 40-year recertification issue. And back when they were changing the building codes and doing all those things, quite honestly, those were the only 2 areas where we had buildings that had reached that age, as far as high rises and those kinds of things. Now there's virtually no part of the coast that doesn't have them, from, like I said, Naples to Sandestin. So I think we will see whether or not it will be each individual city and county passing a local requirement, or whether it will be the state. Of the last few years, the state has not wanted local governments to impose a lot of restrictions. They've tried to, when local governments do, whether it's, let's say, vacation rentals, they try to come in and preempt that and say, no, that should be something that the state regulates, and then the state really doesn't. In this case, I think we might even see where the state comes in and says this has such an impact on life, safety, welfare, the economics of the state, that this is something that's of such importance that we want to make sure there's a statewide standard. I think the other thing we'll see is on reserves, which I think will have an impact on associations. Right now, we have these mandatory reserves in condos for paving, parking, and roofing. And it says you have to reserve for these. You can reserve for all kinds of other things, whatever your documents in the community decides. But for this, you have to. But then the next paragraph says, but you can waive that. It's a requirement, but you can waive it with just a majority of the owners that are at a meeting, that vote at a meeting. So it's just the majority of an owners at a quorum. And like we talked about before, with people weren't showing up at meetings. And so you could literally have a small percent, 20, 30% of a community of owners deciding what to do on reserves. I think we'll see that change to a majority of the owners, certainly. And then I think there'll be that flip side. They'll say, okay, if we're going to want more reserving going on to be able to pay for some of these things so that maintenance is done up, these buildings are up, kept better. I think then there'll be some loosening of what you can do with your reserves. Can you invest them? Are you able to get with a professional, a licensed, just fiduciary, responsible, broker that doesn't have ties to the board or anything? Are they able to help you invest your money so that you can at least keep up with, say, inflation? Because if you're collecting all this money and you're just sitting on it for future repairs, with inflation, the way it's not even keeping up, because in a bank you're getting nothing. So as far as a rate of return. So I think those are the kinds of things that we will start seeing, at least certainly be discussed. They're already being discussed. And then with the legislature, and we'll be in big rooms with people like you and the realtors and the insurance agents and the bankers and the attorneys and the managers, and we'll all be, kind of hashing these things out.
No, I think it's certainly a state issue. I mean, I can't imagine how, this a slow rollout of this is even possible in different areas, jurisdictions. It just you already have certain legislation that is there, 718, 711, 719, it just seems like, stick the paragraph in there, okay? Require the 40-year cert. It's not, the 50-year, whatever else. I guess on the flip side of that is, how do you manage it, right? How do it's a state requirement. Is it then managed by the local jurisdiction? What do they do with the paperwork? How do they enforce it? All that's got to get decided and worked out.
I think a lot of it will be done similar, and this is just speculation on my part, just having been around these things, but similar to what we do with the sprinkler issue for high rises. And in the state of Florida, we consider high rises 75 feet or higher, so like 7 floors. And they passed the building code saying that you have to go back and retrofit. You have to have, so new buildings, already have it, but the older buildings you had to go back and retrofit or put in like an engineered life safety system, and that whole process is administered by the local fire marshal. So every city has their fire chief, which serves as their fire marshal. So I feel like in this case, it'll be one of those things that'll be in the law, but it'll be up to that local building department, building inspector, and maybe the state has to fund that through allow for funding and those kinds of things. But that's, I think, where it'll come down to, where it'll be that hybrid of a state requirement but the administration of it will be, the local building officials, because like you said, we already have that infrastructure in place.
Yeah, no, it just makes sense. I mean, just check the box. Let's move on with it. Let's see let's see what's next. Let's figure out how to make this actually work, because it's so important. I mean, Travis, it's been awesome to have you on, man. I want to make sure that our audience knows about your organization. How can they find out more about what's going on at Community Association on the legislative side? And then how can they get in contact with you if they have any questions?
Sure. The CAI website, www.caionline.org. And then in that website, you can choose Florida, and you can go and you would go right to the Florida page, where you can get updates on find out everything that's going on from a Florida specific, or just in general. I mean, we have just such a large amount of information out there on aging buildings, on safety issues, on all kinds of best practices and things that you can be doing. But then that's where you would find the Florida page. Sign up for alerts through that. So all through session, we send out alerts. It may just be to say this is what's happening. It may say, hey, there's a bill that's up before the Senate Judiciary Committee. Here are the members. Click on these links and please email them and contact them. So that's the best way to do that from a CAI. You can also go legislatively. I like to use the Senate site. I just think it's easier. But flsenate.gov. You can put any bill number up there. All Senate bills are even. All House bills are odd. So when I say like 630, you don't have to remember SB Senate bill. Or when I said 403, you don't have to remember if it's House bill 430. Just put in the bill number. The system will know, even or odd, which it is. And you can also then track bills, and you'll get alerts as those are moving through the process and being changed and developed. You'll get alerts on those if you sign up for that. You can always email me at travis@more-relations.com. And I'm always looking for information, and love having the resources available to me to be able to get really good public policy for associations implemented.
No, man, you're doing a great job, and again, thank you so much for coming on today. Definitely a lot of information there, a lot of changes have happened, and want to make sure that people obviously have the information they can use, and it's been a real pleasure to have you on and talk to you about these important issues, obviously, certainly in the wake of Surfside. So again, Travis, thanks so much for coming on.
Thank you, Daniel. Thank you again for having me and for what you're doing. Thanks.
All right, appreciate it, man. Well, that was a great show. I'm so glad Travis can join us to provide us all this information that you as property managers or community association board members need. You need this information. There's so much coming at you. I can only imagine the immense amount of pressure that you're under. And we want to continue delivering information that you can use, whether it's for your community association or your business, every single week. So continue to tune in. Hit the subscribe button on YouTube, like us and follow us on all the social media to continue to get the information you can use. We'll see you next week on the Recovery Report Live.